Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Today guys, we again will take a look at the Australian dollar because on the euro currency still no any valuable patterns have been formed on the lower time frame charts. The situation on the euro currency in the long-term perspective still stands interesting and attractive, but on the current week market hasn't formed any technical setups that we could trade immediately, and it's not really very interesting for day-by-day videos. That's why we mostly will take a look at the technical setups that have been formed in the Australian dollar. On the New Zealand dollar, by the way, guys, the chances on the getting the double ripple pattern on the weekly chart also has increased significantly because market has shown another upward direction yesterday, and the chances really is nice that double ripple on the New Zealand weekly chart will be formed. But today, guys, as you remember, all eyes will be pointed on the new non-farm payrolls release, and the investors expect that the data should be even greater than on the previous, on the December, the previous numbers. But it's really probably will be difficult because, as you understand, that was the period of the holidays where the recruiting in the economy also could stagnate a bit. That's the first reason. The second reason is that the previous numbers have put really significant and high standards, high numbers, and it's very difficult to overcome these numbers. Because if you remember, on the December non-farm payrolls release, this was a significant positive surprise, about the 50% better numbers that initially were expected. Anyway, that's why the non-farm payroll release, as usual, could turn everything from top to bottom. But still, currently we have on Australian dollar the pattern in place. So we see the double ripple buy that have been confirmed yesterday. So take a look. This thrust down, excellent thrust, now crossing on the 3x3 within this thrust, close above the 3x3, close below, and creating the new low. That is a positive sign for the double ripple. And close above again. That has happened yesterday. Yes, this pattern may be not absolutely perfect. It has some flaws. For example, you see that the valleys of the double ripple, the bottoms, are not very visible, are not very strong and bright. It's a bit flat. Although on the double ripple, it's better to get as more bright bottoms as possible. Also, we do not see any drastic reversal, some growing volatility with the bottom, so we do not see yet the capitulation of the bears. So this action mostly gradual. Double ripple, usually it's better to see that when we see the capitulation of the bears and some fast return right back up. But still, anyway, we do not have any more clear patterns on other currencies. That's why we today will talk on the Australian dollar. So we take a look at the hourly chart. We see here the same double bottom pattern. That in fact the second bottom of the double ripple. So on the daily chart, this double bottom on hourly stands here, and you can see that yesterday market has moved above the weekly pivot point, reached the neckline, and now stands in the logical retracement from the neckline. It's consolidation below the neckline. Also, guys, there's another positive moment from the MACD, so you can see there's bullish divergence, hidden bullish divergence. So market creates the same, almost the same bottom, but MACD shows the higher bottom than here, so that's the classical divergence that supports the possible upward action. So, couple of words on how to trade this double ripple. If you trade on the daily time frame chart, you have the sufficient assets, so you could even do not pay attention to the intraday charts. But for others who trade on the intraday charts, you could watch for retracement here. So I think that we probably should be focused mostly on the first fib support at the 81 pip support here, because from the perspective of the double bottom, too deep retracement will be bad moment. It's not very good for the double bottom. So, minor bounce from the neckline, consolidation here and breakout, that is normal, but too deep retracement will not be very good sign. Still, Judd Napoli teaches that until market holds above the 618 support, the double repo will be valid. But in recent times, markets have changed a bit. So Joe has written in his book in 90s, and since then the markets has changed. And I prefer, when I trade the double repo, I prefer to place stop lower, closer to the bottom, somewhere in around the weekly pivot support 1 here, because this level is well-known level, famous level, and then market makers are trying to wash it out, especially when you have the non-farm payrolls release later in the day. And growing volatility, this level could be washed out. But when market will move here, this will be the high probability of the failure, because market stands very close to the bottoms. I'd not place stop below these lows, because if market will reach this level, it definitely will clear out the lows. That's why it doesn't make sense to place stop below these lows. Besides, if market will take it out of these lows, it will accelerate further on the stops that have been placed here. That's why logically to place stops somewhere near the bottom, it's around 80.35, 80.40 area. So that will be probably near the place where we should place stop if you would like to trade the double repo pattern on a daily chart. How better to enter? So that depends on your risk management, the value of your assets, the size of your assets, because if you have limited assets, you could try to apply the scale-in technique. For example, you could not take the whole position here. Take, for example, 20% of your position. If market will drop further, add more. That will just let you to save your money and to just to match your limited assets value. You could wait just for deeper retracement, for example. So a lot of different possibilities to enter here exist. Just choose what better match to your risk management style and your trading style. Maybe if we later will get some more clues here, for example, maybe market will turn to forming of the ABCD pattern. That also could be the clue that will point on the more precise level where retracement could turn up, could be finished, or something of that sort we could get. Who knows? Maybe we'll get some butterfly on intraday charts or something of that sort. But currently, at the current moment, I think that we just need to watch for this level. Daily traders could take position here at any area, because the daily pattern already have been formed, and those who trade on the daily time frame chart, not watch for intraday charts, right now could take the position. So that's all for today. Let's see what non-farm payrolls will give us, what numbers it will give, how it will impact on the current setup. But right now, at the current moment, technical illustration looks not really bad. So pattern in place. Now we're turning to the taking of the position, and let's be prepared for a possible, as we hope, it should be the upward action on the Australian dollar.